There is a point where money stops being something you spend and starts becoming something you use to change what happens around you. A normal person uses money to buy things. A wealthy person uses money to buy time. A very wealthy person uses money to buy options. And at extreme end of wealth, money can become something far more powerful: influence, access, ownership, and eventually power. But here's the strange part. $1 billion sitting in the bank account isn't automatically power. The real power comes from what that billions dollar can convert it into. So how does money make that transformation? How does a number in a bank account become influence over businesses, markets, institutions, and even people? Welcome to Billionaire Habits, where we break down the psychology, economics, and system behind extreme wealth. And today we are looking at one of the most important transformations in the world of money: how money turns into power. And the first thing money buys isn't a luxury car, it isn't a mansion, it isn't a private jet, it's time. Imagine two people with the exact same business idea, same intelligence, same ambition, same potential, but one has $50,000, the other has $500 million. They may have same idea, but they are not playing the same game. The person with $50,000 has pressure, rent, bills, payrolls, unexpected expenses. And if the business doesn't work, the consequences can be serious. That pressure forces decision. Sometimes you don't choose the best opportunity, you choose the opportunity that pays you fastest. Now look at the person with $500 million. They can wait. They can spend years developing an idea. They can survive failed investments. They can hire specialists. They can experiment. And if one opportunity fails, they still have dozens of other opportunities. That is the first transformation. Money becomes time. And time creates something incredibly valuable: freedom. Freedom to wait, freedom to take risk, freedom to say no, and most importantly, freedom to make decisions without immediate financial pressure. But this is where the story gets interesting, because once you have enough money, you don't just buy more time, you can start buying leverage. Imagine you have $10 million. You could keep that money sitting in cash, or you could use a part of it to acquire a company. That company already has employees, customers, technologies, suppliers, distribution, and revenue. You didn't build all those things yourself. You bought access to an existing machine, and suddenly your original $10 million is connected to something much larger. This is the difference between having money and controlling assets. And this is one of the biggest secrets behind extreme wealth. Richest people aren't necessarily rich because they have billions of dollars sitting in cash. Much of their wealth is connected to ownership: stocks, companies, real estate, intellectual properties, financial assets. And ownership creates something cash alone cannot: ongoing influence. If you own a part of a major company, you aren't simply holding an asset. Your wealth is connected to employees, customers, suppliers, investors, technology, and future growth. Your money has been converted into something that can keep working even when you are not actively spending it. And that's when wealth becomes to compound. Money creates ownership, ownership creates more money creates more ownership, and the cycle gets stronger. But there is another transformation that most people overlook: money can buy access. Not necessarily because someone is handing you a secret deal. It's much simpler. Money gives you the ability to hire people who already have the knowledge you need: the lawyer, the accountant, the engineer, the investment banker, the consultant, the researcher, the technology team, the people who have spent decades learning things you don't have time to learn yourself. And that changes the way to solve your problems. The average person asks, how do I solve this? A billionaire can ask, who is the best person to solve this? That sounds like a small difference. It isn't, because extreme wealth can turn one person's abilities into the combined abilities of entire network. And network creates another form of power: connections. Think about a powerful business leader. Their advantage isn't just the amount of money they have, it's who they can call, who answers the phone, who will take the meeting, who can introduce them to someone else, who can provide capital, who can provide expertise, who can open another door. That is network power. And once a person networks become large enough, something strange happens. They don't have to chase every opportunity. Opportunities starts finding them. A founder looking for funding might approach them. An entrepreneur might want to sell them a company. An investor might want them to involve in a deal. A major institution might want a partnership. The money isn't directly buying every opportunity. It's creating the conditions where opportunities become easier to access. And then we reaches the another form of leverage, one of the most valuable assets in the modern economy, attention. If nobody knows who you are, your ideas can disappear almost instantly. But if millions of people know your name, your ability to influence a conversation changes dramatically. This is why wealthy individuals have sometimes acquired businesses and institutions that already have massive audience. Jeff Bezos provides a famous example. In 2013, Bezos personally purchased the Washington Post for $250 million. He wasn't simply buying a newspaper, he was acquiring an established institution with journalists, readers, distribution, and a powerful existing audience. The important lesson isn't that owning a media company automatically gives someone political control. It doesn't. The deeper lesson is this: capital can be converted into ownership of an institution that already has attention. And attention creates influence. Influence creates access. Access can create opportunities. And opportunities can create more wealth. Now, look at the transformation we have already seen. Money becomes time. Time creates freedom. Freedom creates ability to take risk. Risk creates ownership. Ownership creates leverage. Leverage creates access. And access can create influence. But there is one level we haven't reached yet. Because if money can create access and access can create influence, what happens when that influence reaches the place where rules themselves are created? That's where money enters one of the most controversial arenas in America, politics. And this is where relationship between money and power can become much more complicated because money doesn't have liberty to buy a politician to change the balance of power. It can fund organizations, build networks, employ experts, amplify messages, support campaigns, and keep an issue alive for years. So, the real question isn't simply can money influence politics? The deeper question is how much influence can money create before money itself becomes power? And that's where second half of the story begins. If you are enjoying this breakdown, consider subscribing to Billionaire Habits because in the second half we are going deeper into how money can turn into access, influence, and ultimately power. Let's continue. So, once money has been converted into ownership, access, network, and attention, something changes. You are no longer just participating in the economy, you can start influencing the environment around it. And nowhere is that more complicated than politics. In America, money and politics have always been connected. But the connection isn't as simple as handing someone cash and getting a favor in return. The real mechanism is much more subtle. Money can fund organizations, it can support research, it can pay for lawyers and policy experts, it can finance advertising, it can build political networks, and it can keep a particular issue in front of public for years. That's important because political influence isn't usually created in one day. It's built through persistence. Imagine two groups trying to change the same policy. One has the idea and a few volunteers. The other has a millions of dollars, lawyers, researchers, communication teams, and years of funding. They may technically have the same voice, but they don't have the same ability to keep speaking. And that's where money becomes something more than purchasing power. It becomes staying power. You can keep researching, keep campaigning, keep advertising, keep meeting decision makers, keep building relationships, and eventually the issue that started as a small conversation can become a part of the national conversation. But there is another layer: access. When you have significant resources, you can afford to spend time understanding how a system works. You can hire people whose entire careers are built around navigating the system. You can bring experts into the room. You can understand regulations before they affect your business. You can prepare for changes before everyone else sees them coming. And this is where one of the biggest advantages of the wealth appears. Information arrives earlier. Not necessarily secret information, just better information. A company with thousands of employees and millions of dollars at stake can afford an entire legal and research department to monitor a regulatory change. A small business owner might discover the same changes after it has already happened. The difference isn't intelligence, it's resources. And resources create preparations. Preparations create better decisions. Better decisions creates better outcomes. And better outcomes creates more capital. Now the cycle becomes visible. Money creates resources, resources creates access, access creates information, information creates better decisions creates more money. And that money can be reinvested into even more resources. This is why extreme wealth can become self-reinforcing. But the cycle doesn't stop with politics. There is another system that can multiply power even faster: media and attention. Because controlling or influencing attention can change what millions of people think about. Think about how valuable attention is. A company can spend billions trying to get it. A politician can spend millions trying to get it. A startup can fail simply because nobody notices it. And a person with a massive audience can make an unknown idea impossible to ignore. That makes attention an economic asset. And once attention becomes an asset, it can be monetized. It can be converted into advertising, customers, investment, political supports, brand recognition, and sometimes even bargaining power. This is why modern wealth isn't just about owning physical things, it's increasingly about owning system of distribution. The company that controls the platform, the network that controls the audience, the infrastructure that controls the access, the technology that controls the distribution, the intellectual property that controls the market, and the capital that connects all of them. At this point, money is no longer moving through a system like ordinary cash. It's moving through layers of leverage. $1 can become an investment. The investment can become ownership. The ownership can create revenue. Revenue can create more capital. Capital can create a larger network. The network can create access. Access can create influence. And influence can create opportunities that weren't available before. That's the real transformation. Money doesn't become power because of the number printed on a bank statement. Money becomes power when it gives you control over things that other people depend on: capital, companies, technology, information, distribution, attention, network, and sometimes institutions. But there is an important limit. Money doesn't guarantee power, and power doesn't guarantee control. A billionaire can lose a company, a huge investment can collapse, a media platform can lose its audience, a political campaign can fail, a business empire can become irrelevant because every form of power depends on something else. People have to keep participating, customers have to keep buying, employees have to keep working, investors have to keep believing, audience have to keep watching, and institutions have to keep functioning. This is why the most powerful systems aren't built around money alone. They are built around trust, incentives, relationships, and dependency. Money can open the door, but it can't force the entire world to walk through it forever. And that's where the psychology of power becomes fascinating. Because once someone has enough money, the goal often changes. At first, money is about survival, then comfort, then freedom, then growth. But eventually, another question can appear: what can I influence? What company can I build? What industry can I change? What problem can I solve? What institution can I support? What audience can I reach? What legally can I live? And this is where money starts becoming something deeply psychological because wealth isn't only about having more, it's about having more choices over what happens next. That's why two people can have completely different relationship with the same amount of money. One sees $10 million as a collection of luxury purses, another sees it as a capital. A third person sees it as freedom, and someone else might see it as the ability to build something that survives them. The money is identical. The power comes from how it's used. And that brings us back to the question we started with. How does money turns into power? It started with something surprisingly simple. Money buys time. Time creates freedom. Freedom allows risk. Risk allows ownership. Ownership creates leverage. Leverage creates access. Access creates network. Network creates opportunities. Attention creates influence, and influence can reach institutions. At the highest level, the system can reinforce one another. And when they do, wealth stops behaving like a pile of money. It starts behaving like a machine that can generate more capital, more ownership, more access, more attention, and potentially more influence. But there is the part most people miss. The ultimate goal of the money isn't necessarily to have more money. The money is valuable because of what it allows you to control, create, protect, or change. That's why the richest people in the world don't think about money in the same way everyone else does. They don't ask, how much do I have? They ask, what does this capital allow me to do? Because at a certain level, money stops being the destination, it becomes tool. And the more powerful the tool becomes, the more important the question becomes who is holding it and what they are building with it. This is Billionaire Habits. We break down the system behind money, business, psychology, and extreme wealth because understanding wealth isn't just about learning how billionaires makes money. It's about understanding why money behaves differently once you have enough of it. And perhaps the most important lesson is this money doesn't automatically create power, but when money is converted into time, ownership, leverage, access, network, and influence, it can become something much bigger than wealth. It can become power itself. Subscribe to Billionaire Habits if you enjoyed this video.